Welcome back to Everything Money. We're glad you joined us today again here on YouTube. It's Seth, Paul, and Mo, your three favorite amigos, bringing you stock news, notes, analysis. And we welcome you in. Today we're talking about Intel. Intel is the world's largest chip maker, Paul. I know this company is very new to you. You've never heard of it. And we're going to analyze this. It designs and manufactures microprocessors. You know this, Paul.
I do know this.
You have a dear love for Intel. We've talked about it on the show numerous times. And you're stoked to talk about it today. Why is that?
So their recent guidance has suggested that their free cash flow is going to drop a lot. They're going to spend a lot more money on capital expenditures in order to grow, fight on AMD. AMD is considered the biggest threat to Intel. And a lot of people say, well, Paul, it's dying because of AMD. That's a good, that's a reasonable assumption, but they're currently selling for a very low PE, about 11 or 12. I've liked the fact that they're going to invest more money into their business to grow revenue. They've already, in their recent call with investors, they guided higher on their free cash flow expectation this year, which is still lower than last year and still lower than the previous year, but their capital expenditures has really increased a lot. So I liken Intel to Microsoft back in 11 and 12 when everybody said Microsoft was dead. Selling for 9 times earnings. They were guiding about their increased capital expenditures to grow. They hired a lot more employees. And now you look at Microsoft. I think the story of Intel is a little exaggerated on how they're dying. There is a chip shortage now. When there's a chip shortage, my feeling is the big players in the market will do better because who will people go to gravitate to for being able to handle larger orders? So I still believe that Intel is the leader in the market and will continue to be. I think this drop in price is an over-exaggeration. In addition to that, one of my favorite value investors of all time, Seth Klarman, just came out in February and said that he is a big buyer of Intel. Now, he didn't come out and say that. The 13F filings that show what big hedge funds. Now, Seth Klarman's a very big value investor. Look into him. He's wonderful. He's done an amazing job. In fact, I think his returns have been better than Warren Buffett in the same time period since Seth Klarman started his fund to now. I'm not 100% sure on that one, so I'll have to verify that. But he just took, I think I read a 12% stake in one of his funds in Intel. Now, remember, guys, I don't believe in just photocopying value investors. Mm-hmm. But it is nice that when you believe in something and a very big value investor takes such a big position into them, it makes you feel warm and fuzzy inside, saying, okay, I did my research, I like this company, and then I Googled, I'm like, wait a second, it happened to be this morning that I read this because I get an email every morning about something. I was talking to a patron of ours about Intel. He's got a big position in Intel. And I literally seconds after we started talking about it, I got this email that says, why do hedge funds love Intel? And 3 major value hedge funds, one of which was Seth Klarman, hold big positions in Intel. So again, I don't believe in going out there and just mimicking hedge funds. I believe in doing your research, and it's nice to see validation from other hedge funds, but not just hedge funds, people you really believe in. Seth Klarman is a value investor, which I believe in. But I think Intel is just being grossly exaggerated on the downside. I think the company's worth between $70 and $80 a share. I've sold puts. I own Intel. I also sold puts at sub $50. My basis on Intel is $47, but I do believe it's going to be, or maybe it's $47.50. It's around the $47 to $48 range. I'm selling covered calls on them, and I'm selling puts. I think they got as high as like 60. How high did they get recently?
It was like $60.
No, 67 or so.
60, yeah. Just this morning, they said that they were going to start making chips for Qualcomm and Amazon too. They don't know. Now, the caveat there is they don't know
Amazon?
And Amazon, yeah.
Oh.
They don't know what the revenue is going to be from that. Like with Apple, everybody talked about, oh, they lost Apple. Well, it was 1% of revenue. So what's the percent of revenue?
Maybe 2%.
Huh?
Maybe 2%.
Maybe 2%. But that's big news for them. They're going to be making Qualcomm's chips and Amazon. That's pretty great. And they said that they do think that they will be the leader in the industry by 2025 with that.
So what we'll do today is July 27th. The stock price for Intel is currently $54. We will look at the 8 pillars.
Oh, wow, it's up a lot today.
We will revisit the fundamentals behind this company, behind this ticker price, and we'll use Stock Analyzer tool to look at what we should be paying, even though Paul has his ideas. We'll also go over to Mo as well to look at what people are trading. So Paul, let's get into the 8 pillars of Intel if people are seeing this for the first time.
Now, guys, I want everybody to remember, this is a good learning lesson for stocks. Intel was untouchable 20 years ago. Let's look at Intel's revenue 20 years ago, because this is why it matters. Intel 20 years ago in 2000 had $31 billion in revenue. It's currently doing, I think it's estimated to do 74 billion this year. So a little over double. But look at their stock over the last, they haven't even surpassed their 2000 price level. They hit $75 a share in 2000. If I had told you in 2000 that 21 years later, the stock would still be selling below and would never have surpassed that peak, what would you have said to me? And this is exactly what's going on in the market with so many hype stocks right now. This was all hype back then. Since then, revenue has over doubled and the stock still has not rebounded to previous levels. That should be an indication to you that you should be cautious when looking at these hype stocks. Because Intel, Cisco, Amazon, these were the untouchable companies from back then. Cisco and Intel still have not hit their 2000 price peak. And there's nobody in this world who would have agreed with me when if I had said back then, it's going to be 20 years until this company even comes close to its previous high. So, moving on. We have a $220 billion market cap. Okay, we have an 11 PE, that's a check, and a healthy margin of 24%, that's a check. Dividend yield, 2.5%.
Very nice.
Preach to me about dividends.
Well, dividend, this one's nice, and they have to have the free cash to pay this out. Of course, this dividend is not set in stone. It can change, which we've talked about in the show many times.
Their free cash flow last year was $19 billion. They paid out $5.5 billion in dividends, and they're cutting their free cash flow by increasing their capital expenditures. Free cash flow is cut to about $11 billion. They still have plenty of cash to pay that dividend. So I'm not saying they won't cut it, but their dividend is safe. And I believe Intel, with its depressed stock price, will not want to cut a dividend if they can afford it, because they don't want to already give another reason for investors to leave their stock. So I think this is a safe dividend. Another interesting thing, high return on assets, high return on invested capital. These are all very, very good attributes of a company so far. Okay.
Shall we look at pillar number 3, which is revenue growth over the past 5 years, Paul?
You know what? I'm available. Let's look at it.
Okay.
62 billion to 77 billion. That's a check mark. Now keep in mind, they are guiding to $73.5 billion in revenue this year. So it will be a drop. Just keep that in mind going forward. Profit over the last 5 years.
Pillar number 4.
This dying company went from $12.7 billion to $18.5 billion in profit. Dying companies.
Pretty good death.
This is a really good death. I hope someday I die when doctors tell me I've never been healthier. I will be running more. I'll be doing everything better.
Check, please.
Shares outstanding. Now, this is the exciting part about Intel. 4.7 billion down to 4.05. Guys, even a stagnant company that's buying back its shares can still give you an above average return on investment, because they're buying back their shares, which means they are splitting the revenue and profit up and the cash flow up amongst less shares, which gives you a higher percentage of their revenue and profit as time goes on. Okay? So,
pillar number 6 is current assets over current liabilities, Paul.
Current assets, 45 billion. Current liabilities, 24 billion. Chickadee, 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 check.
Please.
Free cash flow. Now here, guys, it is a check. 11.4 for this dying company to 19.2. 11.4, 11.76, 12.5, 18.2, 19.2. The death of them, guys. Now remember, they are guiding for much lower free cash flow. Why? Because they're greatly increasing their capital expenditures to around $20 billion. Okay, so keep that in mind going forward. This software here, Seth, do you want to talk a little bit about the software?
Yeah, if you're interested in joining our Patreon or any Patreon ever, ours is a place to be. You get access to the software. You can have it this hour. You sign up. The tiers fill on a weekly basis, and they go up every month.
We have about 4,300 subscribers now that literally sit here and buy our software and get our community. And guess this is what they get. Look at this, guys. $25 a month. It was $8 before. It's going to $49. Mobile app, fully ready. 8 pillars, 30 years of financial data, stock analyzer tool,
Which
daily
we will
content.
show. Yep, keep going.
Access to us, real estate calculator, stock screeners, retirement calculator. Here's the Discord community, and cancel any time. 80 cents a day, guys. 80 cents per day. I know everybody watching spends $18 a day on coffee.
I do.
It's 80 cents a day versus our competitors, $200 a month, $200 a month, $35 a month. And look at everything you get.
Becoming a patron, yeah, Paul, if you feel lonely out there in your journey of investing and you're watching random YouTube videos, you can get into our community and talk to like-minded people all over the world about some of these stocks, what they're doing. You get access to Paul's trades. You get access to daily Mo videos, if you're in the bid and ask, of course.
Yep.
And we can guide you along your way. So, Mo, are people trading?
Well, we didn't do the one final.
Oh, we did not do pillar number 8, price to free cash flow. My
Now,
apologies. What multiple?
The last 5 years, 14.62 times 20 equals $292 billion.
Yeah, the current market cap is 220, Paul.
That's a check mark there. Now, keep in mind, they're guiding at a much lower free cash flow number of 11. It's still about 20 times free cash flow on last year's numbers after cutting it on purpose in order to invest in the future for higher growth. So guys, keep this in mind right here. You're buying a company for 20 times free cash flow in the last year when they are cutting their free cash flow on purpose in order to drive revenue and profit.
What am I missing? Is a normal viewer out there, why is this not a hype?
The story is AMD is going to take over Intel, which has been the story for the last 20 years.
Oh.
This has been the story for the last 20. And by the way, AMD has done a great job. But I look at it saying Intel is still the leader, just like Microsoft was still the leader in software in 2011 and 12 and everyone thought it was dead. Apple does a great job with their software, but they still rely on Microsoft for a lot of their software solutions.
Yes.
So I just look at it going, I just think it's going to be, I still am a believer in Intel and I'm still buying it. I have puts on it. I still own the shares. And I do think it's a $70 or $80 stock.
You want to pull it up and run Stock Analyzer while we trade it, Mo? What are people doing in that Bidness Nation?
So let's look back to April of 2020, and I'm just going to draw the best straight line I can. Oh, that was pretty good. That right there is a very good support and resistance line. So you can see that our stock price is sitting there right now. Now, we're absolutely in a downtrend. Let me blow this up a little bit for you. And I guess you can say Intel is technically a short right now. Would I short it? No, because we have history of 18 months that's saying don't short this thing. Unless it breaks through that line that I drew of basically $52.58, I don't really think we're going to go anywhere. I think the better play is wait for this thing, wait until it turns into an uptrend, and try to catch it when it moves up. The only time I think it's going to break through that big long line that I drew is if the market goes. If the market goes, Intel's going to go with the market. Now, with that being said, you are below all four of your major moving averages right now. It broke through its 200-day moving average last week. So again, not a lot of support. The only support level is that historic line that I drew about $52.50, something like that.
If you're confused a bit and you say you don't have time to keep up with trading, you can join the Bidness Nation and the people will alert you when this is a time for a buy. That's kind of me, Mo. Like I'm employed, I have stuff to do, but I like checking in with the Bidness and finding times to buy and sell, which Mo will remind you on a daily basis. Go ahead, Paul. Look at this beautiful software. Go ahead.
So guys, this is our software. It gives you low, middle, and high assumptions for your stock purchases. Look at this revenue growth. It gives you your 1, 5, and 10 years. I'm assuming, let's just say they lose 1% revenue every single year for the next 7 years. 2% of growth, 5% of growth. Even at 2% growth, that makes the company, what? Instead of a $78 billion in revenue, $90 billion in revenue for 7 years from now. Share change, 1% buyback to 3.5%, profit margin 22, 23. All my assumptions are here. I assume a PE of 12 on the low end, 15 and 18.
Current PE is 11.5.
Yep. Analyze. Guys, look at these prices.
Wow.
I have a low of 33 to 35, a high of 107, and a middle ground of 60 to 63. And that's assuming 12.5% return. I'm a buyer of the stock.
So, Paul, you made this software for yourself, and this gives you, this is not like some BS number. This is your mathematical-based price target you'd like to pay for this and giving you some answers, right? I mean, this is one of the hardest part I think our viewers and our patrons have had is how do we transfer, okay, how does the 8 pillars look? I'm kind of in love with this stock. What do I pay for this? This is the final piece. So talk about these numbers again.
So I made this so that I could sit there and do two things. One is an initial look and say, hey, a general idea, where do I think the stock is at? Is it overpriced or not? This thing right here tells me, you know what? If my low assumptions are very low, which I know a lot of value investors don't assume a 15% IRR. They assume 12.5%. That's my middle one. Mm-hmm. And I assume slow growth, if any growth. And I just try to be conservative. The goal of value investor is to buy a stock for 50 cents on the dollar, right? Or 60 cents, some level lower than what we actually think it's worth. I think Intel's intrinsic value is 70 to 80, which is in between the middle and high numbers. And I made what I thought to be conservative estimates in my low, middle, and high numbers. So I look at this saying, I need to do more research. After doing more research, realizing where Intel could go, I still believe that based on this, Intel is selling at a discount. And I'm going to personally use it as a way to buy shares and sell puts to get shares at future dates at lower prices. That's just basically the whole idea of math. Investing is just about math. Every investment is worth the present value of all future cash flows. Now you have to decide what return do you want. For example, if I change my return to 5%, now remember, the lower return means the more you pay for it, because the more you pay for something, the less you're going to make on it.
Yep.
look, I'll make Intel worth 60 to 140, right? It's all about what return, because it's still just math. If I told you there's a future cash flow for the next 7 years on this, and you want to make X return, this is the math you'd pay. That's just it. And so what I'm trying to do is figure out what that makes me feel comfortable at. To me, Intel's a great story because you read all about AMD, 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 but yet Intel's revenue is still increased, and they're still going to reinvest more and more of the money back into the company to grow it and make it much better, bigger and better. So I like it.
That's our take on Intel. Make sure you fondle the thumbs up on the way out. Join the Patreon, and you'll get more access to us to learn more about the stock picks we're actually buying, Paul. There's a lot of no's, but I think the more you start researching value investing and following the best value investors out there, there are a ton of no's until there's a couple wonderful yeses, and this might be one of them. So that's our take. Fondle the thumbs up. Thanks for watching. Love you guys.